I have with me here today Desmond Holmes, and a Managing Director at the Qatar Financial Centre, to tell us a little bit more about how his country as well as his initiative in Qatar Financial Centre is going along in the current environment. Desmond, can you tell us a little bit about Qatar and how it distinguishes itself from all of the other initiatives taking place in the Middle East? You have Dubai, you have Bahrain, you've got Kuwait, and you have the larger countries like Saudi Arabia, Iran, and so on. What is Qatar's unique value proposition in that space?
Thank you, Edmund. Manuel. Qatar is trying to position itself as one of the preferred centres for services in the region alongside of the hydrocarbon sector. So in trying to diversify their economy, they're developing areas in hospitality, through the convention trade, through medical science and research, through education and through financial services. So the country is using its natural gas reserves, which as you say last for 100 years, to help diversify the economy, but by the same time maintaining its culture and preserving its unique way of life. And I think that separates it from other countries where they're not so far down the track in diversifying their economies. They don't have the reserves to fund those initiatives, and they're having to sort of weigh up how much of their culture they're losing in trying to modernise their economies. So Qatar's trying to play that sort of very cautious, middle-of-the-road approach to preserving identity while still growing and developing the economy.
Tell us a little bit about this part of Qatar, about preserving its identity. Do women drive cars in Qatar? To what extent is there universal suffrage? And how modern is the country?
The country is a very comfortable place to live. I myself have been there 10 years. Women can drive, women can work, women do not have to cover up if they do not wish to. There are equal employment opportunities, equal education opportunities. The country adopted a constitution which allows for an elected government, so it's very progressive in that sense, but at the same time it's still very respectful for its traditional Islamic values. So you will still see traditional dress being worn, you will still see families gathering. Prayer is obviously very important, and that's tolerated or encouraged not only for the Muslims living in the country but also for other religions, where we actually have other churches under construction in the country. So very tolerant but still preserving their own identity.
Right. Tell us a little bit about this ambition to be a financial centre, given the fact that there are other states in the region with ambitions to become financial centres. What does becoming a financial centre mean to Qatar?
I think when Qatar started on this path, Bahrain had already been in existence for a number of decades. Dubai had just started their initiative to become a service centre as alongside other service propositions that Dubai has, and Qatar thought about what it needed to develop its own economy. So its proposition in developing the QFC has been to create an onshore financial centre, because it wants financial institutions to do business in the local economy, in the local currency, with local people and local companies. So it's not an offshore centre, which is more how Dubai has positioned itself. And firms coming in have the advantage of the legal and regulatory environment, which is based on common law principles, FSA type prudential requirements, with best practice from people employed from around the globe, but still have full access to the strong local growing economy.
Well, that being the case, how attractive is Qatar for financial institutions to come onshore? How much of that economy is domestic, and what does being onshore mean to an international bank or a bank from another country, another region, to set up shop in Qatar as compared to another jurisdiction, whether it's Bahrain or Dubai?
The main advantages of setting up an office physically in the country is just being able to have access to your clients, spending more face time with them, building your relationships, showing commitment to the country, that you're not just a fly in, fly out sort of a relationship where you come by once every 6 months and hope to pick up some business. So for firms who wish to be part of that economy, which is now over $100 billion as an economy, and as we mentioned earlier, growing at 9% this year. There are real opportunities across the full spectrum of financial services, and the QFC is encouraging banking, insurance, asset management, and the related support services. So there's a diverse range of opportunities for firms to come in and set up and participate in the local economy.
How fast is this happening? Give us timelines of when this initiative started. Where are you today? What is your ambition?
The law to create the QFC was passed in the early part of 2005. We officially opened on the 1st of May 2005, so we've just had our 4th anniversary. The promotion and development of the centre really started towards the end of 2005. So in effect 3 years, if you look at the 3 calendar years, we've licensed just over 100 firms, roughly 60% of which are regulated. That's covering the banks, the asset managers and the insurance firms, and 40% are non-regulated firms. The firms come from jurisdictions from around the globe, so from North America, from UK, Europe, from within the Middle East, from the subcontinent and from Asia. And they range, offering services ranging from private banking with your Swiss private bankings through to your investment banking firms from US and Europe, through to some of your sort of more commercial banks such as ICBC from China, and regional banks. We have institutions from Egypt, Jordan and all the Gulf countries operating there.
And how much of that, how much of the financial institutions that are in Qatar, how many of them really onshore or just opened a representative office? And
we've decided early on not to have a traditional rep office structure because that doesn't engage people fully in the local economy. So we do have a Category 4 license, which is advising and arranging, and approximately 2/3 of the banking licenses, and we've issued about 38 banking licenses, would be for the advising and arranging operations. But 10 of those licenses are full Category 1 licenses, which means you can take deposits, grant credit facilities, provide guarantees, etc. And they include banks such as Citi, who've got a Category 1 license. Some of the Lebanese banks have got Category 1 licenses. Some of the other banks within the region have Category 1 licenses.
European banks?
European banks, not at the moment, but some of them are currently going through the process of upgrading their licenses. So they may have initially came in as a Category 4 and they're now moving to a Category 3 or 2, which means they can start dealing investments and doing more asset management and investment type services.
Right, and they're taking that approach because they want to grow their business organically in a sustainable manner, or are they taking the approach because they're taking a wait and see kind of approach?
I think initially for some of these firms who had existing relationships in the country, it was easier to justify a Category 4 license, which has less requirements for headcount, office space and all the rest of it. But as they've got people on the ground, virtually every firm has exceeded their first year budget expectations, partly because of being conservative maybe in their estimates for a first year of a new operation, but also because having people on the ground is getting them business, which they didn't think they would get otherwise. And so we're seeing this sort of natural progression of firms wishing to upscale their licenses.